I'm Charlotte McLeod with investingnews.com, and here today with me is Clem Chambers, CEO of anewfn.com. Thank you so much for being here. Always great to have you on.
Great to be on, and what a wild time we're living through. Certainly in the markets anyway.
Truly, it is a wild time right now. We're catching up from our last conversation back in February, so a lot has changed since then. I wanted to begin with gold because you've told us in the past that gold is for war, and now we're actually in a war situation at the moment. So I want to catch up with you on gold's performance in the last couple of months. Does it make sense to you what we've seen from the gold price?
Absolutely, completely. And people often say, well, you said gold is for war and we're in one, like you just did. And I go, yeah, no, gold is for war. So you buy it when you're heading towards it. Well, when you're in a war, what do? You use it. It's like bullets are for war, right? And in a war, you fire the bullets. So gold is for war. So you think, oh, there's a war coming. You buy, the price goes up. And then you're in a war. Well, you have to sell it, don't you? So the price comes down. So leading up to a war, when people think there's going to be one, or might be one, or could be one, pushes the price. When the war starts, people have to sell gold. But there's another thing. It depends which war you're talking about. Now, gold, in my mind, in my book, has been going up, not about a war in the Middle East with, gigantic America versus crazy little Iran, but the big one. And the big one is America versus China. That's what the gold price is all about. And that's why the meeting between Trump and Xi, which is in any day now, is so important. Because if they have a meeting and gold goes up, that's not good. If they have a meeting and gold goes down, well, that's actually really good. Really, really good. I mean, I say that as somebody that doesn't have much exposure to gold right now, because when it went up vertical, that's always my signal to go. That is the soprano at the end singing. So it went up like a rocket, and I went, nah, that's thank you, bye, and left. And I did the same with silver first when it did its vertical, and then I did it with gold. And I haven't been in gold or silver in any material way since then. And, I'm in no hurry to revisit that, because those sort of market crescendos, they signal the end of a round. Now, what you can do, it goes smash, and then it comes down, and that's the end. And it goes, oh, I'm coming back. Oh, and everyone goes, oh, it's going to do it again. So, they normally say you've got two opportunities. You get two opportunities to get out of a market at the top. So I always get out before the first one. I don't hang around for the second one, because sometimes the old thing about having another opportunity just doesn't happen, or it's not as good. So I always get up when it goes vertical and everybody's screaming that it's going to go 50 times and that they're going to make, incredible wealth, that they've done so well and they're so clever. That's when I sell. When everybody says to me, I want to buy, I want to sell.
Yeah, I remember when we were talking in February, it was after that big run toward the end of January, and you were saying, well, you'd had enough of gold and silver at that point. But our audience has a pretty strong interest in those spaces. So I just want to clarify, as we're heading forward in 2026, what are you seeing coming for gold and silver prices? Are you seeing more of a sideways move, a downtrend? How are you looking at it?
Well, I look at it a different way. Okay, so I've changed my pitch. You see, I think I'm an investor. Some people say, you're a blooming trader, you are. And yeah, I mean, I don't buy something and then, like Warren Buffett, wait for 50 years to sell it. I buy something when it's cheap, like gold at 2,000, and I sell it when it's expensive, when it's 5,500 or whatever I sold it at. Yeah. And then I go, well, what's next on my list? What's going on? Where's the next bus? Now, most people are not like that. Or if they're traders, they're traders. If investors, they're investors. But most people do not do the thing they absolutely should do, need to, must do, and they never do. And that's have a diversified portfolio of risk. And I always use that phrase, diversified portfolio of risk. Now, one of the classic things in a diversified portfolio of risk is precious metals. And the classic number is 2.5%. And I hardly know anybody that has 2.5% of their money in precious metals. Now, unless you're a gunslinger or an old gunslinger like me, you need a diversified portfolio of risk. And even I do. I don't need a classical one because I understand all the maths behind diversified portfolios of risk, and I can push that about. But for people that don't, they should have a classic diversified portfolio of risk. And that involves 2.5%, maybe a bit more, maybe a bit less, probably not, of precious metals like gold. So if you don't have that portfolio with that proportion of precious metals in it, you should work towards that by buying a bit here, buying a bit there, buying a bit regularly. And, that is what I say to people, have you got 2.5% of your portfolio in gold? And they go, no. I go, well, you should, and you should move towards it. Never be in a hurry. Dollar cost average in. So if the price goes down, you're going to get a lower and lower price. When it goes up, et cetera, et cetera. And that is my position on precious metals right now, this second. In the longer term, I still think platinum and palladium have got a long way to go. But there's this mess in the Middle East, which means that I'm not really looking there. So I'm not really committed anywhere near enough in the market right now, because I think we're in a siege situation with Iran, which means that all the stuff that comes out of the Middle East that's important, including helium, are an issue. And therefore, I'm risk off. That's the best way of looking at it. I'm very risk off, even though I'm slowly going back into the market. But I'm going into areas that are pretty spicy and really not for the faint-hearted, and certainly not widows and orphans.
Would you be able to mention some of those areas that you're looking at going into right now? Because I think the Iran war, it's definitely surfaced some more niche markets that people wouldn't have been aware of before the war started and all these supply constraints started happening.
Well, I am looking at the stuff that's going mad at the moment, and there's plenty of it. Chips, everything to do with AI. And I'm rooting around amongst the undergrowth of that to find players that are cheap, that haven't yet people gone, oh, and actually it's just started to happen in the UK. There's only really two interesting silicon companies, chip companies out there. And one of them exploded about 3 or 4 weeks ago, much to my happiness, because I had a lot of it. And another one's going off the dial right now. Now, whether that was yesterday and it won't be tomorrow is another matter. But it's because everyone's going around going, oh, I need to get in on this. What about that? Oh, that's too expensive. What about that? Oh, that's exploded. Oh, what about that's gone up 5 times? And I'm kind of doing that because I need a different shape of risk, because my normal strategies have to be put to one side at the moment because they involve things that are normal. Yeah, I make a lot of money in normal times, and normal things don't really do well in abnormal times. So I'm risk off there. But when I see something that I like, for example, it's probably actually on my screen right now. I'm going to use the name. I bought this today. Okay. It's a company called EnerSys, and they make backup batteries. Now you imagine if you're building these blooming massive server farms, as I call them anyway, colos, whatever the phrase today is for big buildings full of compute. Now it's called compute. It used to be called computers, but now it's compute. They need to have generators. Now generators, you've got to have lots and lots of generators. And Caterpillar does those. So you go, oh, I'm going to look at Caterpillar, I need to buy Caterpillar. And they've got bulldozers. I'm going to have to be digging up lots of minerals too. I'm going to look at Caterpillar. Oh, blow me. They've already gone through the roof. And why? Well, not because they're needed for mining, which is one of the reasons I was looking at them, but because they do generators. And if you're going to build these big plants and all of a sudden the power goes off, the generators go, hello, something's happened. Up they go. So all these big factories of compute need whacking great generators. And you just can't switch on a plant that makes generators just like that. I'm going to go into the generating business. Oh, no, I'm not. I'll be ready in the 3 years. So, they are getting the spin-off from that. Now, if you looked at the chip people like Micron, they've gone completely bonkers. ScanDisk, mad. But these guys, I can't even pronounce them. What's they called now? Let me have a look. EnerSys. They do the backup batteries. So what happens is you've got your big factory going, and then suddenly, or however many computers, suddenly the power goes off, the batteries kick in immediately. And then the generator goes up and the generator does its thing. And then when the generator runs out of fuel, it leans back on the backup batteries. So backup batteries have many, many, many applications. I mean, if you've got your solar factory, your solar farm or your windmills, you really want to be pumping that into batteries, because when the wind's blowing, nobody wants your electricity, because they're all doing that. And you're getting electricity coming out of your ears. And when the sun's out, you've got it. But when the sun's down, all of a sudden you haven't got it. Then the prices go up. So you say, hey, have some of my electricity. I'll put them in batteries. Yay, have that. So backup batteries and battery, big grid scale battery things, that's one of those big waves are coming. And again, you've got to have factories that make this stuff. You just can't pull it out of your ear. You can't just go, oh, it's a piece of software. How many of them do you want? It's not like that. It's big iron, as I call it. Yeah. So that is a company which is, people are working it out. It has about the best chart I think I've seen in years, because you're just going, oh, as people are catching on. Wow, that's all part of that, isn't it? So all the things that come down from some geniuses in Silicon Valley doing AI. Oh, well, we're going to need NVIDIA stuff. Oh, boo. Well, it already went, right? And then NVIDIA goes, oh, yeah, we're going to buy some factories and plants. We're going to put machines in there. We're going to sell it to you. And then people go, oh, they're going to need to have racking. They're going to need electricity. They're going to need nuclear power. Rolls-Royce, vroom. GE Vernova, vroom. Yeah. So all the things connected all the way down the supply chain are things that right now, that's what I'm looking at. The AI supply chain, and finding ones that people might have missed. Yeah, or they haven't missed them, but they haven't really gone completely crazy. Because in the US, you see, in the UK, I've got a really good company in the UK. I'm on the stock market. I'm valued at 2 times my sales. Oh, congratulations. In America, 12 times my sales. So it's like when I picked out Intel all those months ago, they were a chip company on 2 times sales at $20. So I said, hello, NVIDIA, 60 times sales. Oh, AMD, 12 times sales. Hello, this one could go up. Other reasons. Well, now they're $115 rather than 20. You can see that people went, oh, and there's been a lot of that going on in the semiconductor business. Yeah. So all this semiconductor stuff is all going nuts. So I told my people on my YouTube channel and on my Substack, and this is actually relatively hilarious, right? Because I was talking about this opportunity, and one of my commenters commented, he said, you need to look at Nokia. And someone commented, Nokia, you've got to be kidding me. What kind of crazy man are you? And I went, hold on a minute. I had a look at Nokia. Within like 3 minutes, I'd bought a truckload of it, because it's a joke. Nokia is a joke in most people's minds, because those little plastic phones back from 1987 or whatever it was, all the people in Africa are on their little indestructible Nokias. Yeah. But that's a long time ago. That's .com era. Yeah. And what they are now is the back end to a lot of mobile phone systems. They make the machines that you talk to with your mobile. Okay. They went away from the handsets into the infrastructure, and they've been there for quite some time. Now, what happened was NVIDIA went, yeah, well, actually, Donald Trump and his lot went, we've got to make America great again. We've got to have the best mobile phone technology. Do this. And that's called 6G, which hasn't arrived yet, is arriving, is the next thing. Got 5G. Oh, funny enough, 6G. So America's going 6G. Okay. So NVIDIA goes, oh, America's going 6G. It needs AI. Of course it does. Well, I mean, actually, it's clever stuff. So it does need that, it does need increased computer intelligence to do lots of clever things with it, and maybe talk to your handsets and all that good stuff. So they went, right, who does that? Chinese companies? Nope. Because all the Chinese infrastructure people have been kicked out of Europe. and were kicked out of the UK many years ago. Funny enough, the UK got it first, and they're not welcome in the infrastructure in Europe and America because nobody trusts it. Sneaky little backdoor. Oh, let's listen to the politicians on our infrastructure. We made all that kit, didn't we? We've got a backdoor, haven't we? Well, so goodbye. No, go away. We don't want any of your stuff. So you're limited to American back infrastructure providers and European ones, and Nokia is that. So NVIDIA goes, right, Nokia, here's a check for $1 billion. We're your friend now. And people noticed that, but of course, when everyone went, well, why's Nokia gone up? Nokia. And then suddenly, well, they've gone ballistic, haven't they, over the last few weeks? So that's the sort of thing I've been looking at and been positioning in, because there's a pretty much a stellar selection. And then when you go, right, okay, I've looked at chips and they've all gone mad. I can't bear to buy those. Oh, and I've looked at all the people that do really, really clever cables, and that's all gone mad. Oh, and the people that do the generators has gone. Probably the people that do the roof tiles have gone mad as well, but haven't got down to that bit yet. And then you go, oh, what about them? Yeah, battery backups. What's their chart looks like? Well, somebody's getting the idea. So some people like it. It hasn't done that, but it's starting to do that. So what I'm looking for is people within the ecosystem, as they like to call it, and it's a gigantic eco because it's a supply chain. Every link in that chain has got an ecosystem. Yeah. So you go around all the pieces of the supply chain, look at the ecosystems, and see if there's anything poking out at you that you think, oh, well, hold on a minute. And what I've been doing is effectively looking at the price to sales. So they should be a good company that's been going for a very long time. They've got a lot of sales. And when you look at the multiple, it's 2 or 3, not 10 or 12. Yeah. Or 750, whatever. And Palantir is. Yeah. So, that is where I'm at. But it's at I can't do my normal game anymore because it's, this Iran situation is such a fly in the ointment. But, copper's still good because there ain't enough of it and there ain't ever going to be enough of it. And it doesn't matter if it goes down. It just means that your average price will be a bit higher for what comes next. Like copper a lot. These, things like Nokia, rare earth. There's a great rare earth ETF out there. Sprott don't pay me, but they might. And that's a very brand spanking new ex-China ETF. Now, the thing about rare earths is that they're all come out of China, and you can invest in rare earths and get a load of Chinese companies, which is kind of not the point. The point is to get rare earth people that are not involved with China. And Sprott have done a ex-China rare earth ETF, which is doing quite right. So that's an interesting area. The thing that your listeners should think about, and they probably all love miners and stuff like that. It's not the mining that's the bottleneck. It's the processing. So people that process the output, that's a real choke point. And those people that can take your ore and turn it into ingots or whatever they're turning it into, colourful dyes, that's where the pop's going to be and is being right now. So that's where they should, it doesn't matter. If they love chromium, should go look to who does processing for chromium. If they love uranium, who's the uranium processors? Probably the government, but you know what I'm saying. You know the way to do it. And I'm talking like this rather than giving out names is because, some of them I don't have names for, but B, it's the process that's important, not the names. Yeah. Because if you don't do the process and you win, well, you were just given a gift. Yeah. And if you lose, well, it was their fault, so you don't actually take responsibility for your actions. So you have to make your own wins and losses, and you have to get there by using a process. And I've gone through a few processes, and if, people should go, oh, I could do that. I could go onto Yahoo and start doing that. Maybe I get it a bit wrong. Maybe I get it a bit right. Because once you've mastered a process, you can do it forever. You can go, oh, I can apply that thing that I did 5 years ago to this thing.
That gives us a great idea of where you're focusing right now and how you've adjusted in this war situation, which I think is really important. I also wanted to make sure to bring up oil, which is another one that we talked about last time. And of course, that's been quite disrupted by the conflict. We've seen a lot of price volatility there. I know we were talking about the potential for $300 oil last time. I wonder how your outlook has changed or not changed given what we've been going through the last couple of months.
Well, as far as I can see, in the market and in oil, there's a lot of intervention. And we know there's a lot of intervention because they're draining reserves. So, that is almost by definition intervention. So what you have to ask is what's going to happen? Now, I think that what is going to happen, and I did a piece on this on YouTube on Sunday before the news of what Iran said about the American proposal, if you can call it one. And I said, by the time you watch this, I'll be probably completely wrong. And my thesis is it's a siege. America's going to besiege Iran. It's just going to sit there and say, don't fire anything, because if you do, we'll fire back much bigger. And, we're going to stop you from selling your oil until you do a deal. And if you don't do a deal, we'll sit here. And if you do anything we don't like, we'll blow you up. That's it. Siege, castle siege. You're locked in. You can't come out. You can't ship your oil. If you build a pipeline to China, we'll blow up your pipeline. You are going to do a deal, or you're just going to sit there and you're going to wither away. That's the siege. And within, say, a couple of months, everyone's going to be bored with that. No, we don't care. Some ship sunk. Who cares? What's going on somewhere else. Yeah? Bit like Ukraine right now. Does anybody know what's going on in Ukraine right now? Is that on the television much? Yeah. So they will just let everyone get bored with it. And, no one's going to get killed because they can have a few paper planes, throw a few of them, get shot down. They can run a few rubber dinghies at some battleships and see how far they get with that. But, people just get bored with that. So, there's no human stories. There's no, heroes get dying or anything. So it becomes boring. But, for Iran, it's a stranglehold, isn't it? So that's a pretty smart strategy. You don't have headlines, 6 Marines die in a tragic event and all that. Yeah. So it becomes boring. So nobody cares anymore. Yeah. It becomes a chronic issue. And news, media and people don't care about the chronic. Don't care that, 45 motorcyclists died today. Yeah. They don't care about that. Now, if a film star falls down the stairs and breaks his ankle, oh yeah, headline, right? So, it gets defocused. Yeah. They just sit there and, Iran just goes into a horrible tailspin. Or, they sort out their governance and say, okay, we'll be sensible. We'll be nice. We'll stop being terrorists. We'll stop blowing up Yemen and all those other places where we keep shipping things that go bang. And, we'll be part of the international community. But that's a siege, and that's going to go on and on and on. And that 10 to 20% of the oil that's going to go through that gap, because a fair amount of it's going over pipelines now, and et cetera, et cetera. But, that's not going to be there. So that's has ramifications. Now, the thing about capitalism, and even if you're not a capitalist, you've got capitalist elements, is that it adjusts. So in that situation, there'll be a lot of adjustment. And therefore, if it's going to be a siege, you've got to work out where the adjustments are going to be, where the pinch points are going to remain. So, for example, I have a Norwegian oil company. Well, it is Norway, actually. It belongs to Norway. It's not like some Norwegian bloke owns it. It's a Norwegian oil company called Equinor. And they've got no oil coming out of the Middle East, or no oil going around the Straits of Hormuz, no equipment sitting in the desert waiting to get hit with a paper plane with a bomb on it. Yeah, so they're not exposed. So my positioning on what I see as being a long-term siege is Norwegian oil. They pay a 3.5% dividend. So you can buy $1 million of that and get $38,000 worth of dividend every year just to sit there. So, that's the sort of intersection of opportunity that I like and I look for. So if you can find oil that has a no downside much to the Straits of Hormuz opening, but plenty of upside if it remains closed, or an asymmetric of that, then you're in good shape. So, but I don't see oil going to $3,000 a barrel unless something immense happens. That is not on the cards yet, and it doesn't seem like even if the Hormuz is glued shut forever, it would put maybe another $50 on oil, and then after a certain amount of time it'd be back down again. But it's a siege. As far as I can see, it's a siege. So if there's a miracle, i.e. some sensible behavior, then that will be that will all come to an end quickly. But it's just going to be a siege, months and months of siege, because countries can go down the road of hell a long way, and they just do it. I mean, look at North Korea. I mean, what an awful, terrible place it is for people there. And why? Because they've got a government, a totalitarian government, and that's what totalitarian governments do. They just kill anybody. They don't care. Kill their own people, kill their own family sometimes. So if you look at the totalitarian states of the past, and Iran is a totalitarian state, they're quite capable of remaining in that black hole and for almost an indefinite amount of time. And of course, the only way to stop them building a bomb is to either get them to hand that stuff over, or make sure that every time they start trying to do it, you blow them up. So that's really the siege. And, people that think that Iran wouldn't build a bomb and then use it, I think, that's a point of view, and I don't really ascribe to it. And the cost of that is immense.
So this is shaping up to be a long-term event, although it sounds like potentially we adjust to the situation.
Yeah,
I wonder. Okay. Yeah. So I wonder then, what are you seeing coming for inflation? Because that's a big concern right now with all the supply chain bottlenecks with the oil price. Do you see that going much higher, or is that something else maybe that adjusts? How are you looking at it and the impact on the global economy?
Inflation, yes. And more. You see, there's so much doomsday talk on all the media that people can often lose their anchorage on what inflation going up means. So I would see it at where it got to at the height post-COVID, 7-8% officially. So that could be more. It could be 10-11%. But up there, over 5 and under 10 for a very long time. Because everything is pointing towards inflation. Yeah. The reason why we had low inflation in the past was that China imported deflation, or we exported our inflation to China. Is one way of looking at it. They did cheap stuff for us. Okay. And if you're going to cut them off, your stuff's going to get more expensive. If you're going to onshore your industry, it's going to get more expensive. Why? Well, the reason you sent it abroad in the first place was because it was cheaper. Yeah. So you've got to realize that onshoring and reindustrializing is going to create inflation, because you're going to have to print money to build that stuff out. It doesn't get built without capital or without money. It isn't really capital in a way, because it's pulled out of thin air. But that new money supply that will have to be pushed in, that's inflationary. So the supply chains that are being ruptured, that's inflationary. The situation in the Middle East, which is a supply chain issue, if you wanted to make it abstract, it's not about a load of mullahs or whatever. It's just a supply chain. And the supply chain broke because of, let's have some abstract words, geopolitical stress. Yeah. Well, that supply chain, which is messed up, that goes into prices, doesn't it? So all these supply chains, all this globalization that everybody seems to think is a bad thing, all that going away, which it is now, or retreating for sure, that pushes prices up, because the reason things globalized was to keep prices down. Yeah. So, economies traded their immense dominance for getting stuff cheap. So there you are. That was the trade. And that has come to its end now, because the people that were receiving the inflation got inflated, and they're now big. Yeah. So now America wants to keep its primacy, or maybe regain it even, depending on your point of view, well, it's got to bring everything onshore. Well, that means prices go up a long way. Now, not overnight, because it's a process. And then to cap it all, you've got this AI build out. Well, they're going to need to print more money for that too. And the reason they're going to need to print more money for it is because the West and the East are now, I wouldn't say in conflict, but now in competition, or at least scaring the living daylights out of the West, that the East have now caught up. Give or take, they've caught up. Yeah. And China's got 1.4 billion people. And it's being kind of, a little bit crusty now, rather than kind or rando like India. Yeah. India's kind of intrinsically quite friendly. Yeah. And they're coming up really fast, but you don't get the feeling that they want to, conquer anybody, or that they've got any axe to grind, or that they even really bothered about being particularly militaristic. But you look at China and they're pretty scary, and they're not really being scary, but boy, they look scary. And they've got a very big, scary thing they want to do, which is take Taiwan back inside their borders. So that scariness has sparked, well, if you've got any sense, you see that China is going to be the world's dominant power within 10, 15 years. If it isn't already, it just doesn't throw its weight around. Not directly, not acutely. Maybe chronically it does, but not in the short term. So you've got this conflict, America versus China. America wants to stay number one. China's coming up so fast, it's going to be number one, whether it wants to be or not. Yeah. And America wants to take that back and build itself up again and be up here against the rest of the world again. But, if you can't control your fiscal deficit, it's not going to be that way, is it? Anyway, that's another matter. So you've got two conflicts. You've got trade conflict. Thank goodness it's up at that point of the pyramid. And on top of it, you've got the ultimate conflict, which is of intelligence. Because if your competitor is smarter than you, that's not going to be a good outcome, is it? So they've all got to fight to be number one, or at least as good as the number one, or close enough to the number one in AI. That's why they've got to build this stuff out. It's not for our benefit. Yeah, because the countries have to be, as a country and a state and a geopolitical force, equally smart as the other lot. Oops, for Europe a little bit, I think, on that one. But nonetheless, the two big players are America and China, and they're both knocking themselves out to be number one in intelligence. That's the top of the pyramid, right? And then below that, you got services, below which is trade, really, trade and industry. And then under that, you've got digging stuff up, and then under that, you've got land. Yeah. And historically, the conflicts are at the land level, and everyone runs around killing each other. But this day and age, the conflicts are at a higher economic level, thank goodness. But of course, it's always a stress that it doesn't come down the pyramid. But there is an ongoing battle at the top level, which is AI, and the level below, which is trade and industry. And that's where the conflict is. And it's between China and America. Gold is for war. Yeah. Because if you want Taiwan, you're going to be running it pretty close to a war, aren't you? And that might have actually ended. That might be delayed. That might have been put off. So the big event coming up now is the Trump-Xi meeting. That could set the stage for the next 5 years. So it could be very, very good, or it could be very, very bad. And if you want to know what happened in that room, just watch the price of gold up after the meeting over the next few weeks. If it goes up, bad. If it goes down, good.
Okay, so that's how we can gauge what happens at that meeting. I know this is quite tricky, but do you have a sense right now? So we're looking at this big top level battle between the US and China. Any ideas at this point from you on who could come out on top? I think it's really interesting. You're talking about with rare earths, people are looking to invest in rare earths company outside of China. But, if China is going to potentially emerge as the victor here, should we be looking to align ourselves with Chinese investments, for example? How do you see it?
Okay. Chinese investments, they've got a real problem with accountability and accountancy and veracity. So investing in Chinese companies, that America has a premium because of its governance. In fact, really, the only thing, this might sound a bit strange, but the major advantage that America has over China is governance, because it is a representative democracy and China isn't. Now, some people look at a good old one-party state like China and say, that's a much better system. I don't know. You pick your side. If you think that the Chinese system of governance is better than America, then America's totally over. Yeah, because 350 million people, massive budget deficit, a hollowed out industrial base. It's not going to fare well against a 1.8 billion people with a better governance, if that's your point of view, and a massive industrial base and vast amounts of energy and building out more energy like there's no tomorrow. I mean, the trajectory is daunting, frankly. I think if you look at the trajectory of China, it's daunting what America has to do to be the comeback kid. And I think they have to be the comeback kid. If you can't make light bulbs, how can you be a dominant economy? And, you can go down the list of things that America basically can't make anymore. I mean, it could if he wanted to. And that's the whole strategy is, look, we can do it again. We can make ships again, we can. We did it before. We can do it again. Don't let the Koreans do it all. Yeah, we can do that. And in fact, that was one of those Donald Trump attempts at making that happen, putting on a $5 million fee on anybody that parks their oil tanker in America that comes from China, so that you'd have to buy an American boat and save the $5 million fee every time you showed up. And they went, yeah, well, that's a great idea. Yeah. Oh, no? Really? No? Oh, okay, then we won't do that then. But everything they did when they started off, you look at it, it's all an attempt to make a taxational reason to get the industry back on shore. Tariffs. Bring your factory to America and you won't have to pay them. Ships. If you park your Chinese ship in our port, we'll bill you for that. There's a lot of that. It's all about bringing it on shore, which of course makes everything more expensive. Yay! Which causes inflation. Yay! So there's a big shifts underway. Will it be possible for America to do it? Well, I think now the penny's dropped, because what it means, I mean, you can see this in rare earth. In rare earth, the American government will pay you, if you mine it and process it in America, twice the going rate. So if it's $100,000 a ton, they'll pay you $200,000 a ton if you've made it in America. And, well, of course that's inflationary by definition, right? But that's the only way you can make it so. I mean, the way the Chinese got their complete dominance in rare earth is every time somebody tried to dig it up anywhere outside of China, they just dropped the price until the people went bust and then put it back up again. Yeah. Oh, you want to make something that we want to control? Yeah, we'll undercut you until you go bust, and then we'll put the price back up. No, it's classic. I mean, what people don't realize is how deep the stranglehold goes. So I'm working in rare earth, so I can use it as a good example. People think they can dig up rare earth in America and then they'll be fine. Well, no. What are you going to use to process it? Oh, we're going to use all these acids. Okay, where do they come from? Well, it's China. Ah, okay. So you're independent of China now, are you, with your rare earth processing? Ah, we found a source of acids. Yes, we're in good shape now. We're fine. Okay, that's great. Where are you getting your equipment from? Well, China. So all your precursors, you have to get them from China, and all your equipment you have to get from China. So not only do you have to find the mineral, you then have to find all the acids that you don't make anymore, not much of anyway. And then you've got to find all the equipment you definitely don't make anymore, because you don't make any of those whirly glass things anymore, because you outsourced that 30 years ago. And the only people that make whirly curly glass things are China these days. And you need some 10-inch nails, and funny enough, they don't make them in America either. So, the supply chain goes very, very, very deep. And that is all going to have to be retrofitted or refitted or remade in America. And, they're going to have to print money for that like there's no tomorrow. And they still won't necessarily pull it off. Capitalism will find a way. But of course, you've got to be living in a capitalist society. And there's certain elements in America that are not very capitalist. Not anymore. So, it's a massive challenge, massive challenge, huge opportunities. And anybody that backs these opportunities in America is helping it happen. So, when you put your capital into Caterpillar, you are helping it happen. It's a very democratic, it's a very patriotic thing to do. And the thing about the American market is very rewarding as well. So, hey, you get your cake and get to eat it too.
Right. So this is daunting, but they're lining up to help make this happen, and people can participate in that as well. I think it makes a lot of sense how you're laying it out there. I think we've done a pretty good job covering where you're looking at right now, including some parts of the market that our audience is very interested in. But before I let you go, any final thoughts you would leave investors with right now? I think, as you said, it's a bit of a tricky time. Are there things we might be overlooking that people should know about?
Well, I think people need to understand that they need to be active, and that your viewers are going to be active. So they are on the right part of the curve. Yeah. They're on the right part of the wave. They're trying to catch waves to have a good surf into the beach. They're not flapping about. Yeah. And the idea that's out there that I really don't like, because it's part of the divide and conquer idea that's out there, trying to make it worse for everybody, is the idea of a K-shaped economy, which I don't know why they call it K, but anyway, let's call it K, which is basically saying one lot's going up and one lot's going down. And that is true. And it probably always has been, and it probably always will be. But the key thing is to understand is, how do you get to be in the group that goes that way rather than that way? Yeah. Now, there's some obvious things that we're all not doing. We're not getting into debt. We're not drinking a bottle of whiskey every night, etc. But the meta of that is being active or being passive. Now, in this environment going forward, you're going to have to be active in whatever way you can be active. Yeah. And it can be the markets, because that's a very active place to be if you really want to be. And, it's a skill game. So you have to really apply yourself. But if you're passive, you're going to go that way. And there's no way you won't, because inflation rewards the economically active and it punishes the economically passive. That's why the governments have it. That's why the governments create it. They don't create economic passivity, because that don't pay taxes. And deflation, for example, makes everyone go passive. They go, my money's going to be worth more tomorrow. I'm going to hold on to it. Yeah. Hard money. People don't want to spend hard money. They want to spend not soft money. So you spend it, you make the merry-go-round go round. Yeah. So the whole system always rewards the active, which is why there are all these billionaires, and gazillionaires, because the whole system says, you make stuff, we're going to pay you. The system's going to pay you big time. Yeah. Now, the converse of that is, if you want to watch television for the rest of your life, you're going to have a smaller and smaller television as the years go by. Yeah. If you go passive, and a lot of retirees find that out when they retire too early, right? They retire at 50. Yay! And when they get to be 65, they're starting to sweat because, they went passive too early and they've been punished. As savers, they've been punished. Yeah, because the system rewards spenders and active people and people that take risk and run around and are economically active. So the best protection for what's coming up, and a lot of people are worried, and rightly so, is to be economically active in some way or other, and or as much as you can be, because that will be rewarded. Economic passivity, that's going to be hammered, absolutely hammered. And actually, I'm seeing that in Japan. I do some stuff over there, and a lot of people have become economically passive because the rates of interest were so low that they could borrow money for nothing. Just basically have handouts at 0.1%. So if someone lends you £1 million and you're paying 0.1% in interest on that, that's like £1,000 a year in interest. And as long as you don't go too wild, you can live off that million for the rest of your life. Or as what they were doing carry trades, which was chasing yield with that $1 million. Well, now their interest rates have gone up not that much. But, we'd be singing Hosanna if it was like that in here in Europe and America, but not over there. Because all that money is now a great millstone around their neck. And they've taken a economically passive route. And now it's gone into inflation where you need to be economically active. They're up the creek without a paddle. And, that there's a whole generation of people who are being crushed by that because they have lived in an economic passive life. And now they have to shift over to be active. Well, they don't know how. There's no place for them to be active, particularly. And they're getting horribly mashed over the last couple of 3 years because of that. There's a whole slug of actually middle class people that had been, chasing yield with borrowed money, borrowing at no percent and trying to get 1.5 on it. And then, of course, obviously, when that flips around, and now you're paying 3 on your 1.5.
Well, I think being active, that's a great message to end on here. And I think you're right. I think many of the people who are watching today are active in the markets and paying attention to what's going on. So thank you so much for coming on. This was great, as always, to hear your thoughts.
Oh, I'd love to be on, and I look forward to my next appearance.
Oh, me as well. For now, once again, I'm Charlotte McLeod with investingnews.com. And this is Clem Chambers with anewfn.com.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.